Remember when companies like Moderna, well, they seem to just revolutionize global health almost overnight.
Yeah, it felt like they were just on this unstoppable path.
But here's a question for you, maybe an intriguing one. How does a company that, literally changed the world with one product, how do they adapt their whole strategy when the demand for that product, well, it shifts dramatically?
It's a massive challenge, really. It forces a complete strategic rethink. They've got to show incredible financial discipline,
Right.
but at the same time, keep investing in that future pipeline. It's like walking a tightrope, pivoting hard without dropping the ball on innovation.
And that right there, that's really the core of our deep dive today. We're going to unpack Moderna's second quarter 2025 financials and their big business updates. This is all about understanding their strategic response, to these changing market dynamics, everything from pretty deep cost cuts that are reshaping how they operate to these ambitious steps forward across their entire pipeline.
Right. And we've pulled our insights straight from the source, their Q2 2025 earnings call transcript and the press release that went with it. So you're getting the unfiltered view.
Exactly. Our mission today is basically to give you a shortcut. A shortcut to understanding Moderna's current financial health, where exactly they're making those deep cuts, and crucially, how they plan to drive future growth with this newly diversified pipeline.
Hopefully give you some of those aha moments along the way.
Yes, hopefully. So you leave this really feeling like you've got a handle on it. Okay, let's start with the financial health check. Because the numbers, well, they tell a pretty compelling story about navigating these shifting tides.
You really do.
So, on the surface, Moderna's Q2 2025 total revenue was $142 million. Now, that's a noticeable drop from $241 million in Q2 2024.
Yeah, quite a drop.
And their net product sales, mostly COVID vaccines still, came in at $114 million. The U.S. was about 80% of that. So the top line definitely shows that significant decline from the peak.
But here's what's really illuminating, I think. Despite that lower revenue, the company's net loss actually improved. Quite significantly, in fact.
Oh, interesting. How much?
It was $825 million compared to a $1.3 billion loss in Q2 2024. So this isn't just a minor tweak. It signals their performance was, as they put it, in line with expectations.
Right.
The real aha moment isn't just the revenue drop, which was expected, but that nearly 40% reduction in net loss despite it. That tells you this is a company not just, trimming expenses, but really surgically re-engineering its core financial structure.
So they planned for this.
Seems like it. It's a bold move, kind of redefines what a successful quarter looks like for them now in this post-pandemic world.
That's a critical distinction. Okay, so their focus has shifted. And on the cash front?
Well, Moderna ended Q2 with $7.5 billion in cash and investments. That's down from $8.4 billion at the end of Q1, mostly just due to ongoing operating activities.
Okay, so still burning cash, but maybe more controlled.
Exactly, more controlled. And that brings us right to where that financial discipline really kicks in. Operating expenses.
And when we say discipline, we mean like dramatic reductions here.
Yeah, they're not messing around.
Moderna reported that their combined cost of sales, R&D, and SG&A saw a 35% reduction compared to 2024. But maybe even more impressively, on a cash cost basis, operating expenses were cut by a huge $581 million. That's a 40% decrease year over year.
Wow, that's substantial.
It's not small change, right? It's a fundamental resculpting of their spending.
Which immediately makes you ask, okay, where exactly are those cuts happening?
Right.
Well, R&D expenses dropped 43% year over year, came in at $700 million. And that was largely driven by winding down this really big, expensive respiratory clinical trials.
Okay, that makes sense.
And then SG&A, selling general and administrative expenses, decreased 14% to $230 million. That seems to reflect just broad cost reductions across the company.
But okay, while they're slashing expenses, there's this kind of curious paradox maybe in the cost of sales numbers. It speaks volumes about their current challenge, I think.
Go on.
The cost of sales as a percentage of net product sales actually increased to 105%. It was 62% last year.
Whoa, 105%. So it cost more to sell than they made.
For this quarter, yes. They said it was mainly driven by the lower sales volume, and it included $38 million in inventory write-downs and another $52 million in unutilized manufacturing capacity.
Oh.
So it's just a stark illustration of trying to adapt production to this vastly changed demand.
That's a really clear indicator of that challenge, adapting to lower demand for their main product. It just highlights how crucial it is for them to scale down manufacturing efficiently while moving to this leaner operational model.
Right.
Now, if we look ahead, their updated 2025 outlook, well, The revised full-year projections now expect total revenue somewhere between $1.5 billion and $2.2 billion.
When they lowered the top end of that range, right,
Yeah.
by $300 million.
Yes, exactly. And the reason for that adjustment is basically a timing shift. Specifically, some UK COVID vaccine shipments got moved from 2025 into Q1 2026.
Ah, okay. But importantly, this doesn't actually impact the total value of their long-term contract with the UK, does it? It's just timing.
Correct. Purely a timing thing. And for product sales overall, they're expecting $1 billion to $1.5 billion to the U.S. and maybe $0.4 billion to $2.6 billion internationally.
And what about expenses for the full year? Any updates there?
Yeah, R&D is forecast lower again, now $3.6 billion to $3.8 billion. That's down from their previous $4.1 billion forecast. SG&A stays around $1.1 billion, but they do expect it to be higher in the second half.
Why higher in the second half?
Mostly due to commercial activities ramping up and also severance charges related to the restructuring.
Got it. And they're sticking to that year-end cash projection.
Yes, reinforcing their projection of approximately $6 billion in cash and investments by year-end. So despite this whole transition, they're really trying to hold the line on that cash position. Shows a strong focus on cash preservation.
Which makes sense, given everything. It all feeds into these overarching strategic shifts, right? Which Moderna has kind of boiled down to 3 core priorities.
That's right. First, drive the use of their existing commercial products. Get the most out of what they have now.
Second, keep advancing that pipeline to fuel future sales growth. That's the long game.
And third, execute with financial discipline. Everywhere. Across the whole company.
And this financial discipline, it's not just a quarterly tweak. They have some really aggressive long-term goals that are, frankly, pretty astonishing.
They are ambitious.
They're aiming for a total reduction in annual GAAP operating expenses of over $6 billion. Think about that. Going from $11 billion in 2023 down to $5 billion or less by 2027.
And if you translate that to cash costs, which often gives you a better sense of the immediate burn rate, they're targeting over a 50% reduction. From $8.9 billion in 2023 down to $4.2 billion by 2027.
Wow.
It's a massive undertaking. It fundamentally reshapes their entire cost structure.
So how do they possibly achieve these huge reductions? They've laid out 4 main drivers.
Right. First is completing those large phase 3 trials, especially winding down the big respiratory ones, plus future savings from CMV and norovirus trials as they progress.
Okay, the trial costs.
Second, they're laser-focused on manufacturing efficiencies, specifically aiming to cut down on those inventory write-downs. Remember that $500 million in 2024. They want to avoid that by better matching production to demand.
Makes sense. Third is procurement savings. Renegotiated contracts kicking in fully by 2026.
And the fourth one, which is often the toughest, is workforce restructuring. They made that difficult decision to cut headcount by about 10%.
Right, aiming for under 5,000 employees by year-end, down from 5,800.
And the ultimate goal here, the finish line they're running towards, is achieving cash break-even by 2028. It's ambitious, no doubt, but it's underpinned by these really deep operational changes. They're truly re-engineering the company.
And this push for efficiency, it's not just about cutting jobs, it's about rethinking how they work. And this next detail, I think, really highlights their commitment to that reinvention. They're leaning heavily into AI. Get this.
Oh, yeah.
100% of Moderna's knowledge workers are active daily users of ChatGPT.
100%.
Daily.
Daily. They're using enhanced AI tools for what they call deep research capabilities, like creating comprehensive target product profiles. Apparently, it significantly cuts down the time needed for market strategy development. It really shows them trying to reinvent the company with technology right at the core.
That's actually fascinating. They're using cutting-edge tech, not just for, the headline drug discovery, but for streamlining the core business operations, accelerating market strategy, basically building a leaner, smarter organization from the inside out.
Yeah.
That approach, it could be a real differentiator in the long run.
Yeah.
Might even force competitors to sort of reevaluate their own operational playbooks.
Speaking of differentiation, let's pivot to their pipeline progress, because this is really where they're fueling that future growth, trying to move beyond just the initial COVID success.
Absolutely key.
So on the commercial product front, specifically COVID-19, they've had 3 recent U.S. FDA approvals. They got the okay for mNEX Spike, their next-gen COVID vaccine, showed higher efficacy, approved for 65 plus Epsilon and also 1264 with risk factors.
Good expansion there.
They also got full approval for Spikevax in high-risk kids 6 months through 11 years. That was previously just emergency use authorization. And the EMA in Europe approved Spikevax's updated strain for the upcoming season.
And for RSV, another win, expanded FDA approval from RSV now includes people aged 18 to 59 with risk factors. That aligns them with competitors for that 50 to 59 age group, widens their market quite a bit.
Okay. And from a market perspective, given those shifting tides we talked about, what stands out to you about the current COVID vaccine demand? Is there still a market?
Well, outside the U.S., demand seems pretty firm, largely because of those advanced purchase agreements they have in place, provides a stable base there.
Okay.
In the U.S., the spring booster campaign volumes were only slightly down overall. And interestingly, among the 65-plus demographic, it was down just 1–2%.
Oh, really? That's stable.
Yeah, it's subtle, but I think it's an important insight. It suggests that high-risk groups are continuing to follow public health recommendations.
Yeah.
So there's still a persistent, albeit smaller, core market.
Okay, that makes sense. Now, moving on to their exciting respiratory pipeline, their seasonal flu vaccine, mRNA 1010, showed what they called positive and strong phase 3 efficacy data.
Which is exactly what they needed.
Apparently, it demonstrated 26.6% higher relative vaccine efficacy than a standard dose comparator in adults 50 and older, and consistent strength across age groups, risk factors, and all 3 strains tested.
That's very promising data.
Sounds like it. They're preparing for FDA approval now.
And this is a critical step for their whole respiratory portfolio.
Yeah.
It also directly impacts their combination flu plus COVID vaccine, mRNA 1083.
How so?
Well, they actually made a strategic call to voluntarily withdraw their BLA, that's the biologics license application for the combo vaccine.
Oh, they withdrew it. Why?
The plan is to resubmit it after this flu efficacy data is available. Basically, these strong flu results are crucial for their discussions with regulators about the combo vaccine. It lets them present a much stronger, more complete data package.
Ah, okay. So it's a strategic pause. Means probably a sequential approval process in the U.S., maybe combo first then flu or vice versa.
Likely sequential in the U.S., yes. Though they mentioned concurrent filing might be possible in some other places like Europe.
Okay.
It raises an interesting question, though, about how different regulators will view combination vaccines versus individual ones, especially now with this new flu data and the appeal of a single shot.
Good point. Okay. Beyond respiratory, their pipeline gets even more diverse and maybe even more ambitious. The CMV vaccine, mRNA 1647. This is where it gets really interesting, I think.
Yeah, CMV is a big target.
The phase 3 study has accrued enough cases for the final analysis, so they have the data points they need. But the company is still blinded to the results.
Yes, and that highlights just how rigorous they're being. They're actually updating the analysis plan before unblinding. They want to add important powered secondary endpoints.
Like what?
Things like measuring the virus presence in bodily fluids or viral shedding. This is to really understand the vaccine's true value, especially for preventing congenital CMV, where stopping virus transmission to newborns is the absolute key.
So they want more data points before they even look at the main results.
Exactly. Better understanding the full picture, the analysis is expected this fall, and those results could be a major turning point for them.
Okay, definitely one to watch this fall. And briefly, their norovirus vaccine, mRNA 1403.
Also in phase 3, also accruing cases. The timing of the readout just depends on how quickly those cases come in.
Got it. Then there's their oncology therapeutics portfolio, which they're doing in collaboration with Merck.
A very important partnership.
Intismeran, that's mRNA 4157, has a pretty robust late-stage program. Fully enrolled phase 3 adjuvant melanoma trial, that's after surgery to prevent recurrence, and a phase 2 adjuvant renal cell carcinoma trial, too.
Plus more in lung and bladder cancer.
Right. 2 phase 3 non-small cell lung cancer studies and phase 2 bladder cancer studies are actively enrolling patients now.
Easy program.
And here's a new development that really shows how personalized this therapy could get. They've launched a new phase 2 study, but this time for first-line metastatic melanoma.
So treating cancer that's already spread right from the start.
Exactly, which raises this kind of provocative thought. Could patients potentially get this individualized neoantigen therapy twice? Maybe first in the adjuvant setting after surgery, and then later, if their cancer evolves or comes back as metastatic disease, they get an updated personalized vaccine.
It's certainly a possibility they're exploring. Given the therapy is tailored to the patient's specific tumor at the time of biopsy, it theoretically could adapt. It could offer a whole new dimension to precision oncology, treating the cancer as it evolves.
Really cutting-edge stuff.
Also in oncology, their checkpoint program, mRNA 4359, has an ongoing phase 2 study. They plan to present phase 1b data at the ESMO conference in October. That program is targeted for filing by 2028, showing that's a priority for Moderna.
Okay, and finally, rare disease therapeutics. What's happening there?
Progress in propionic acidemia, or PA. That's in a registrational study. Early results look promising. And for methylmalonic acidemia, MMA, they've agreed on a pivotal study design with regulators and will start that registrational trial in 2025. It's getting support from the FDA's START program, too, which helps speed up rare disease therapies.
So momentum across multiple fronts there.
And one more thing, underpinning all this innovation is strategic maneuvering, protecting their technology. They recently had a significant win in the UK Court of Appeal.
Oh, yeah.
It upheld Moderna's EP949 patent against Pfizer and BioNTech. It just underscores their commitment to defending their innovative mRNA tech globally. They see it as foundational to the future.
Okay, so wrapping this all up, what does this mean for you, the listener?
Well, Moderna is clearly demonstrating strong financial discipline. They're strategically cutting costs, literally by billions, while at the same time investing heavily in a really diversified, late-stage pipeline.
Yeah, they're not just surviving this post-pandemic shift. They seem to be actively trying to shape their future beyond that initial COVID success.
And they're doing it with, frankly, remarkable speed and precision.
Indeed. They're charting a course that really prioritizes efficiency and broad innovation. It almost feels like a reboot for a company that already disrupted an entire industry once.
So here's something to consider, a final thought for you. Moderna is dramatically cutting costs, and they're using advanced AI to fundamentally reshape how they operate, becoming this leaner, AI-powered biotech powerhouse. How might this model, combined with their diversified pipeline, how might it change the landscape for traditional pharmaceutical companies? Could it impact their often slower approaches to R&D, manufacturing, even just general business operations in the coming years?
That's a really interesting question.
It's a question that could potentially redefine the whole industry.
Yeah.
Definitely something worth pondering.